All right. Welcome to the value of everything. Let's go through today's show topic. So, somewhat lacking in preparation this morning. Didn't really even read through my show notes. So, I thought of going through my old box of tricks and finding my traditional rant, that the old chestnut, and letting off a little bit of an explanation of the property market now, or the real estate market, however you'd like to call it. Now, this is one of my very first topics, which really got me kind of hooked into the economics sphere. Once you start pedaling down this road, it really does take you into an interesting route of doubt of our systems. I think, definitely more doubt has been brought to my attention through studying economics than really the facade of politics. You would expect that you could expose quite a lot from the perspective of a politician. However, you're relatively quite sheltered to it. Obviously, you're living in the circumstance of what the politician maybe has decided over time, so you can't quite really quantify what has been going wrong. However, when it comes to economics, there is numbers which do not lie, and there is a certain pattern, and there is histories. I know there's histories that apply to politics as well, but history is very relevant when it comes to economics. We do have histories of bubbles and we have economic cycles. So when somebody pokes their head up and says, we are in the greatest time of all time, where we have mastered the art of economics and we have found the methods to continuously create exponential growth. Now, that has actually even been mentioned, maybe not quite like for like, but has been mentioned in the past throughout history. I believe somebody said, so the future is brilliant or something in the 1930s. So we do have a lot of credible evidence when it comes to economics, which can really put us into a heavy amount of self-doubt. Whereas when you go through politics, there's two sides. You're fairly channeled into, there's the left and there's the right, and you're not quite so sure as to any other options which are out there and ideas. So your mind is fairly channeled when you do approach politics for the first time anyway. So let's lead back to economics. So when I was fairly young, got some half-decent earning jobs, I was looking at the property market, and probably this would have been in 2007 in London, and the property market was really growing quite rapidly, and it was quite scary how there was a certain unsustainable nature to the housing market. And usually what I like to do, particularly when I was purchasing cars, and I purchased many products, is I do a bit of research, and I quantified the amount of research in comparison to how much the investment would be. So say a car could have cost me about £10,000 to £15,000, where a house potentially could have been costing me around that time between, let's say, £300,000. So really, before I put my skin into it. I wanted to just do the full research, get the background of making this purchase, and the first thing that was quite relevant to me is that this wasn't a outright purchase. All of the purchases that I usually made in the past was in the form of outright ownership, but this time, if I owned this house, I would be in debt to the banks. So I was quite, let's say, quite wary of interests and how certain mates got themselves into debt and they found it very hard to get out of debt. So, and I was quite wary as a kid that there was economic hardships in the 90s, and there a lot of it. I remember even visions on the TV. I weirdly liked the news when I was a kid, and I remember a lot of like the scenes where you see all the for sale signs outside the houses. So I didn't really want to find myself in that cycle again. So I started to do a little bit more research into the housing market from that point onwards. Now, the housing market is a very interesting thing. Now, obviously, if I invested back in 2004, I would most likely have made a fairly decent amount of money. So, considering that I do not possess a home, I don't own any land assets, it's kind of interesting that I've probably on paper, I've made an incredibly bad investment decision, because if I had got investing into the London property market, I would have done fairly well. Obviously, there was a 2007 crisis, and depending on how the governments reacted to that crisis, I could have been wiped out. But it was the fact that the government did step in at that time that the property market did continue its exponential rise further and further, and we seem to be getting ourselves a little bit closer to that sign again. I'm just talking in the London property market at the moment, but there is signals of sellers putting forward slight discounts, and that hasn't been happening since 2007. So there are little indicators that there is slightly turbulent waters coming about. So just in those terms alone, you can see that if I was an investor and I was giving you advice, I would, in the past, how many years is that? We would at least say around about 10 years, I have given you incredibly bad advice back in 2004, 16 years, sorry, what am I talking about? 11 years. I've been giving you some incredibly bad advice, because we could have, you could have had an investment property back in 2004, and that would have risen all that time. But the problem with this cycle is that you didn't really quite know when was the good time and the bad time to get into the market. You may have got very spooked in 2007 and potentially made a loss when you sold your property. And I am aware of actually a lot of people in the UK that have made decisions to sell their property at the wrong time, just when 2007-2008 crisis was kicking in, and they had made a loss. So you do obviously hear about the wins, but you don't necessarily hear about the losses, as you find with gamblers. So there is interesting perspectives there. Now, I have moved to Australia, which didn't really undergo a property fall. With the UK, we did see that a lot of the property prices went down quite rapidly, particularly outside of the London bubble, because there has been a big international player market where people like to. I always think of that shopping bag with the locations of like New York, Paris, London, Tokyo. Probably we can throw in Beijing now, maybe, or Singapore. So it's very interesting, and obviously the property market has been bought by these high-end earners, particularly from the oil countries in London, and particularly from the Asian markets and Russian markets. There's the oligarchies who have managed to be in charge of big industrial resources companies, like things like Gazprom and things like that, favors for favors in political positions. So we have had a big international boom just inside London. Now we come over to Sydney. Sydney is on that shopping bag as well, I would imagine, to a certain extent. It's not quite as fast, but it is a fairly highly populated country in the southern hemisphere. So it does have a definite mark, and it has definitely the image in people's minds, and it is sort of very closely linked to Asia, so it's kind of interesting in those respects. Now, Australia has really the property market hasn't been smashed in any way, shape, or form. I remember just before the crisis, there was a number of things the government has walked into and try and propped up the market. Now, you can see that there's this continuous story between what my predictions are and what the government does. So we do have a little bit of a dynamic going on. So I believe in Australia what happened was there was a one-time payment which got ordered out to everybody. I'm not sure exactly the sum, but it was a fairly decent shot of money where everybody who had paid their tax returns got something silly like $2,000. So everyone had a windfall, a cash injection. Also, if you were a new property buyer, you was given a grant, I believe maybe $10,000 to $20,000 free to purchase a house. So there are all these little props which kicked in to sustain the property bubble. So very interesting dynamics from Australia's perspective, and it was just enough credit expansion to smoke and mirror the market. Well, let's not just use those words. Let's just say to sustain the market without having to see the fall that all the other countries had seen, particularly the US, who had particularly invested a lot of money into people which had very poor credit ratings and were really not suitable to have fairly large home loans. Okay, so there's those little aspects which I'm just giving you sort of backgrounds from my perspective. So obviously when I arrived to Australia, I didn't really want to get involved with the property market. In Sydney, we have a very large disparity between average wages and the property prices. So in an usual world of sustainability, let's say around about 3 times the average earnings is what is called a sustainable repayment. It's a sustainable price. So usually you've got to determine that you're going to have a wife and kids. You're going to have one wife that is looking after the kids, and you have to have that job or to sustain living. So, but obviously I know a lot of people, both couples do work nowadays, but that was usually the tradition. That's potentially one of the reasons why both partners have to go into work and have to spend less of their time with their children to really help and assist with their education and growing up. So there are lots of anomalies which can occur from this asset price inflation, which people are ingrained to sustain. Now let me go back to the original opposing argument that anybody who is a commentator on the housing or property market will always say. Now, this applies everywhere that you go, but I'd like to just sort of drill down into this, because people will give you a certain story when it comes to property prices, and they won't give you the full picture. So, firstly, people will say it's all down to supply and demand. So, if there isn't a big enough supply of houses, and people are not willing to pay that price, then that sort of they're willing to pay that price, then that determines how the property market goes. But usually the guidance or the very not well looked into sort of idea would be, well, we've got a shortage, we've got a housing shortage, and that basically is the problem with property. And that sort of song has been played out in London and in Sydney, so it's one of those stories which continue forevermore. So, supply and demand. The question is like I would always say, whenever you get into these very foggy waters, particularly when you're looking into things like politics and nationalism, when you look at economics, I would always start really asking your own questions to these things, because there's a lot of meat on this bone, and it really is not quite as simple. It is fairly simple to understand once you start delving into it, I would say, but it's just a case of really doing a little bit of background research and asking the right questions at this little paradigm that happens. So, supply and demand. Now, the question is, when you ever get posed that, what drives supply and demand? Because supply and demand, obviously, I just gave you a little quick picture of demand is what somebody's willing to pay, and supply is what's on sale, what people have put on sale at the time. So it's given you a fairly easy, rosy picture of what's going on, but it doesn't really give you anything of a grain of understanding. So let's look at supply first. Now, what drives supply? So, firstly, just on terms of the supply and the quality of the supply, the worst thing, the mistake that everybody makes is when you ask the question, do houses always go up in value? The answer is wrong. It's actually, they always depreciate. Now, you think maybe, what the hell are you talking about here? But in theory, if I've built a new house, maybe if I've built some historic house which has some artistic value, maybe you might have a small chance that it goes up in value. But as like a sort of auction, I don't know, you sort of guess what I'm coming from there. So, when you purchase a house or you build a house for the first time, you've got to understand that there's a certain factor which happens, which is depreciation. So the wood, the foundations, everything that the house is built with will deteriorate over time. And give it a certain amount of years, that house will fall down onto the ground. So understanding that is quite a key principle when it comes to purchasing any house. And obviously, if anybody's watched The Money Pit, it's a very, very useful film to watch, in terms of where you buy this gigantic old house and the amount of money that you have to throw at it just to restore it. And there's always, I think there's these TV shows where you get these old aristocratic families who have gone into ruin because they've got these gigantic mansions that they can't really sustain, and it's slightly in a dilapidated state. So, think in those terms. Once you buy that house, the boiler's going to bust, all number of things can go wrong, and you are liable for all of that, unless you really don't mind not having hot water and things like that. So all houses that you purchase go down in value. Now, the next point would be land. The land that you build it on potentially will rise. Now that is probably the key point. Now, land can rise in value, but the actual property, the thing that's built on top of it, will definitely depreciate in value. Now, where you have that land, we have to work out, so what drives the increase and decrease in land value. Now, the obvious one would be the supply of land to people. So the government usually, in most countries, owns the majority of all the land, and they decide on releasing certain lots of land to investment property builders, and they build it in a fairly not really spoken of way. If you ever delve into this, it's not quite a route of you understanding much of it, and there's probably a little bit of backhanders going on in this market, I would suspect. So this is all my thoughts and theories, but where you would have a government and a business agency, and they are trying to do deals with each other, and there's a certain release of land which is occurring, I would expect the person who is organising and releasing land to individuals, to businesses, will probably be quite susceptible to bribery and all of those things. So you may have a certain element of corruption in this field of land release, particularly by the government. So that definitely is an element of supply of the actual land. Now, the government, the interesting story obviously of Australia is that we have the highest amount of land per capita than any other country. So it's just like the most ridiculous country. Now, obviously, nobody wants to be living in a desert, but it's still an interesting concept. There are still tons and tons of beaches and beautiful places which really nobody lives in because there's lack of jobs and security and things like that. So it's a very interesting concept when it comes to Australia anyway, with regards to the release of land, but this will apply to every other country that you will look at. Now, with the release of land, obviously you have people that buy and sell land as well, and then we have to look into the population flux as well. So the population flux will change the demand. I won't quite go into the demand part too much, but I will mention that in a little bit later. So this supplier element, we have land release, we have people, let's just say just people choosing to sell their properties. That's really guiding supply to the market. And in theory, we do have a number of those factors which are churning over, and it gives really like a quite an easy idea of the supply of coming onto the market. Now, there could be a certain different things which are occurring. There could be new model ways of supplying accommodation to people. So obviously you can create a load of high-rise flats on one piece of land. So where you would have one piece of land, now you can supply plenty more. Where you'd have a 3-bedroom house, you can create a 3-bedroom house, a 3-bedroom flat, or apartment. So you can really change the supply of things in a number of ways of how the people use the land and apply it to reach the market's needs. So there are just some interesting concepts with supply, and I'm sure there are plenty other aspects which you can delve into yourself with your own just applying a little bit of thought onto that one. So it's an interesting point. Supply isn't quite as simple as just people choosing to sell their properties, but obviously that is one key factor. Obviously, there's a psychological element of supply as well. So people like to sell when the properties are high, and they like to buy when the properties are low. And also from a psychological perspective as well, if the market is going down, they choose to hold the property for a certain length, to hold out the bad weather until the market turns around again. However, you do have the psychological factor as well, is that if there is a continuous cycle of things going down in a rapid way, people will go in, like market psychology, going, oh my God, how much further low could this go? I might as well get out of the market now at this heftily discounted price before the shit really hits the fan. So you do have psychological factors which, because there's obviously people involved and people exchanging value for money. They're exchanging value by the means of money. You do have these interesting dynamics occurring. So I mentioned the word money, and that rarely gets us given a mention. So let's go to demand. Now, what drives demand? Now, the simple explanation of demand is people going, I might buy a house today. And that really doesn't quite give us a really good idea of what is demand. People also say, if you add an extra million to a country, that obviously is just people that want to move into a 3-bedroom house. Boom, 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 like straight away. And that doesn't quite necessarily represent what demand is either. Now, this is where we get a little bit into some light economics. Now, if you could consider that it is just you and I, and we are trying to bid for a property, we earn exactly the same wages, we have exactly the same savings, and let's say there's nothing really to separate us in accordance to a bank. Now, we bid against you and I. Really, it comes down to the perspective of how much debt one of us is willing to take on. But then, really, it doesn't really matter about what we say. It's really about Mr. Bank, who comes along and says, well, I'm only willing to give you this amount. So it's not really down to the people who chooses how much to lend out. It's up to the bank. And if the bank's both limited us to a certain level of money, say that the bank's only given us $1 million each, or $1 million each, that is the limit, and we really both want that property. We're both going to be meeting exactly the same point in bidding for that property. Now, also, if the bank decides to give us $50,000 each, that is basically all that property is going to be worth. If us two are the only people that are going to be bidding for that property. So, if you determine that now, the way that the market really works is based upon how much a bank is willing to lend the population. So really, we now need to look at and turn the focus on to the banking sector and the government, of course. Now, so we have like this interesting perspective now, and this never really gets mentioned too much about credit expansion. So if the banks exponentially rise the credit expansion, so they add on more and more debt onto their books, and they use sophisticated products to amalgamate and reduce the credit risk of these mortgage debts, so they can put it into collateralized debt obligations, where you amalgamate all of your mortgages into one large financial product, and then you put this big rating on it, and you say that this is this creditworthiness, and then you can trade it out with other institutional banks. You can play around with those monies, and you can and the banks do have different ways of reassessing how much their assets are worth. They can use their quants division team to determine how much risk is on their books and how much little risk is on their books as well, depending on how they would like to apply their Black-Scholes formulas. So they do have a number of ways of changing it, and obviously when you if you think of money expansion, banks do have the method of where you go to a bank and you ask for a loan, you take that money and you have it as a loan, and then you put it in as a deposit. You have actually created money, because now the bank has also lent out money and got a deposit at the same time. And from the accounting ledger perspective, they can create more money from that. So there has, from this debt expansion, which banks can create, you have exponential rises. And that partly comes into the explanation of why banks and the banking sector has done fantastically well over the last, say, 20 years. And obviously they're in a little bit of a worrying situation right now, but they have been doing incredibly well by this method of exponential rises in credit growth. Now, the banks are really not the only part of the story, and they do have little methodologies of they're obviously well into the system. They never really get too much of a mention when it comes to property. Obviously, they're heavily exposed to any disruptions in the property market, and obviously, as you could see, there's a direct correlation to when in America you had the poor loans. I can't remember what the word is. There was a certain way of describing the poor loans which were being lent out. Once that started to go belly up, then you noticed that all the big banks found that there was a rapid loss of liquidity, and they were shit scared of lending to each other, and they really didn't want to give out any money out, and they wanted to keep all the liquid assets on their books. So when Lehman's brothers were asking for cash for assets, they were just given the FU, and nobody really wanted to lend them any money to pay off their collateral obligations. So if just to stay in the game, you've got to pay your collateral position. Like that's basically your sort of your principal when you pay a mortgage, sort of thing. If you're not paying your collateral, and this collateral obligation is being charged on a daily basis, if you're not meeting that, then you are ineligible for default. So that's why all the banks turn to the governments. Now, interesting factor here is that banks do turn to governments, and banks do invest a lot of money into the political parties as well. So, and it's interesting that both where we look at America, the Democrats and the Republicans do get an even fair share of the slice of the pie when it comes to investing into the political systems. So it's a hedge. It's like the old banking model of hedging the either side of the political domain. So when either one comes into power, you have nothing too much to worry about, because they have got your back covered. Now, in terms of the banking sector, they are corporations, so nobody really takes full responsibility of the actions. The shield of the corporation doesn't make anybody personally liable for anything that hits the fan. So there isn't, so we do have all the systems of irresponsibility and lending, which goes out of control. And then we look back at the government, and the government allows the banking sector to do risky lending. So I know that there's certain levels of change of view from the government. So let's say that they're there definitely will be good people that have good intentions in the government, and there are definitely good people that have good intentions in the banking sector. However, we do have greed dynamics which do occur, but I guess there is regulatory change, there's collateral requirements which have increased, but all these regulation changes really didn't change too much in the way of making banks very responsible with their lending principles. Now, when it comes to governments, obviously I've mentioned before where I try to make my I stayed out of the property market, and the 2007 would have been the time when everything turned around, and I would have been sitting there quite pretty with my assets, and then my liquid assets to purchase a heavily discounted house. The government starts to step in, and they like to keep the sustained bubble rising. Now, obviously, you can see in one respect, there's you got to just see in the respect of the government, why do they have so much skin in the ring when it comes to the housing and property market? Because they have to remedy the problems of the financial crisis. Obviously, the US decided to. And obviously, the US is like the most incredible one, which what happened, because they're meant to be the torch holder of the free market, and they're not meant to prevent any kind of bankruptcy. Failure is part of the free market. You do not have any improved systems if you do not allow for failures to happen. So, when there was a failure in the financial system, obviously people really shit scared the government, and the government decided to bail out all the banks. Let a couple of them fail. I guess we can grant them that, but the remainder of the banks were bailed out with certain funds to keep them in the ring for a little bit longer, to sustain them further until so that they can continuously exponentially rise. So can the government as well. So if a banking sector fails, what is the first thing that hits the government? You have incredible issues in terms of really the nature of reality of the world for a person. So if a really massive institutional bank does fail, and the government says, okay, well, let's let you fail. Let's see what happens. The depositors lose basically their money, but then the government does have usually most governments around the world do have a certain level of guarantee of all the deposits. So I believe there's certain limitations of maybe like $250,000 or something like that. If you've only got that in your bank account, which majority of people haven't really got anything in surplus of that amount, then the government is on the line for all of these amounts of money. So they don't really want to be liable for losing all of this depositors' money. So they try and work out a way of putting off this pain, and the easier option between losing depositors' money and with a banking failure, or investors' money as well, they prop up the banks and keep it in a sustainable level. Now, it's an interesting dynamic. Imagine if you did lose your money in the banks. Banking failure does happen. People in the past have gathered around banks and wondered why they had invested into that bank in the first place. But it does really change the nature of the entire system. And obviously, if you did have massive failures and people just lost their savings and all their money in that moment, you have massive problems on your hands. You have this ridiculous amounts of business failures. You would have mass unemployments. You would have almost to the point of starvations. There's a ridiculous amount of things which start to occur in the circumstance of a gigantic domino effects of the financial sector, which is incredibly scary, incredibly large. So that is probably one of the most fundamental reasons why the government would come to rescue these large institutional banks. But there's a system that they have been doing more and more risky lending, and they've exponentially rised, and they've really been sucking off the cream of this exponential rise, which in theory is a little bit of a Ponzi scheme where they're lending out further and further money for something that's really not a productive asset. So if you think of a house, it's really not, I guess you could say it's improving living standard to a certain extent, but it's not really making the country more productive. And that's one of the interesting factors with Australia. It's not really becoming a very high-tech industrial country. It's just really being a mining sector where it just ships out a lot of resources and iron ore, but it doesn't really, even though it has all these incredible amounts of raw materials, it doesn't really do much with it in refinement or producing it into some kind of high technology, even though it does have all the resources to do that. It's interesting in terms of what is happening there to countries. Now, the government has lots of means and ways. There's lots of little things which are occurring with the government. So you can see now a little bit as to the motive of what a government is trying to do. It's trying to keep its sustainment. It's trying to keep power. Obviously, that's rule number one with governments: keep power. And then you might want to just try and look after your political donators, and then you may want to be interested into your voters. So, so it is a fundamental hit on the sustainability of government itself, and it would create a ridiculous amount of hardship to people in a rapid amount of time. So that's why government and banks are sort of in it, and there's sort of a point of no return. Now, you can see this with China as well. They really do not want a crisis happening on their watch. They do not want to see the shadow banking system, which is basically like people loaning on credit ridiculous amounts of money on credit, which is getting exponentially rising. And then there's institutional banks, which seem to be on paper a little bit better. But once the house of cards underneath it, the shadow banking sector, starts to default, which they're very acutely aware of, but there's so much corruption and stuff that's going underneath the books that they can't really get a hold of. And they know that once the stock market and the margin lending starts to crash down on them, they can't really keep this bubble from going. And obviously you've got a fairly unsustainable property market which is occurring in China as well. There's ridiculous amounts of property which have been built. There's entire cities which look like a model of London, a model of theme parks. There's all different things that have been built, and they're all vacant and not taken up. Yet there's still been an exponential rise in property investors who want to outbid the next property investor, who wants to outbid the next property investor for an empty home which nobody wants to buy. So we've got this point of an asset which is just being traded with no means of value. It's essentially a Ponzi and a pyramid scheme. There's a different definition between Ponzi and pyramid scheme. I'll have to look it up later. I remember there's a very distinct difference between the two of those. I think it's something to do with like trading around the interest, and one is just trading around the actual original sum. But yeah, anyway. So you can see how governments around the world are really in it together. They're all trying to keep the bubble sustained. And the next thing that we're looking at now is we're looking at the currencies. So you have this interesting dynamic where all the countries around the world are looking at each other and they're going, my God, this is probably where it's going to happen next. And if they start to fall, I'll crumble as well. So you are seeing a fairly sort of a cycle which is probably like following how the world revolves around, is that quantitative easing is happening in China, in like Tokyo. It gets handed over to America. It gets handed over to Europe. And it seems to be going under this continuous cycle. China does have their own means of creating credit expansions. They supply pseudo companies to go into the stock market and buy up their a majority of the stocks just to sustain the market. You also have things which are going on in just like America with the equity or the stock and share market, where the CEOs are noticing that there's this exponential rise in credit expansion, and they might as well get on the back of it, where this quantitative easing is happening more and more and more. So they get access to this cheap credit, and then they purchase back their shares. And where you have a currency which depreciates, then you have the share prices going up in value. So they're trying to profit from that in that respect, but essentially a share of the company is only worth what's the value of what it can produce, not really how much it can credit expand. So we do have problems in a number of markets, and there's a lot of disease and viruses of the mind, and what the management of countries and corporations are doing. You can see the direction of things of which they're going. Now, obviously, I've got into a very big economical picture there, just to explain a little bit about the dynamics of why the government's so heavily involved in all of this. Now, that is the sort of the worrying factor. Now, let's go just back to the currency. Now, so the governments have issues in terms of keeping the bubble alive, keeping it going on this exponential rise. If the assets continuously increase in value, then all is good. Once we have a decrease in asset value, then there's margin calls. People were saying, right, we need more credit to stay in this this bid of this stock, and if you can't, then you're going to be stop lost and you have to get out of this market position. So you do have this incredible situation now where everything has to be the currencies need to be basically trashed to keep the exponential rise. Now, the problem is with this currency thing. Now, we're seeing this around the world. Everyone's trying to trash their currency. And the particular way of trashing your currency, or the easier way for a government to do it, is using their central bank to lower the interest rate. So when you lower your interest rate of your currency, then people, like, say, if you're somebody who's got access to all the markets, they look around and then they say, where can I deposit my money into any bank in the world? I will deposit into this bank in the world. Obviously, you can think of like these international banks, which have got banks everywhere. You'd basically just deposit all your money into the place which can give you the highest returns for the lowest risk. So once a government lowers their interest rate from the central bank, and then the central bank lends out to the investment banks or the institutional banks, people decide, we won't have that currency anymore. We'll move it out somewhere else. So that's what creates the devaluation of the currencies. Now, as you can see around the world, everybody's now close to zero in terms of interest. So that has been pretty much, that idea has been exhausted to its limits. And you have this interesting factor as well, is that you have government's worst enemy, which is the deflation. So governments have this model of continuous growth. They have GDP, they have a number of factors which keeps them on a paradigm of continuous exponential growth, because if they were trying to have a currency that never went up and down in value and was expanded, then you would have mega issues in terms of the amount of promises that have been made for the future. So in terms of all the pension funds and everything else, it wouldn't be sustainable. You have to have this credit expansion to pay off for all of this stuff in the future that has been promised. I haven't quite explained that perfectly, but if you just do a little bit of checking of how many promises have been made into the future, how many bonds have been released into the future, how much the elderly care cost, how much the welfare state costs into the future, really to pay it off, it's an incredible price that you would have to pay in the future. So that one of the best ways to combat that is to trash the value of that, or the monetary value of that, so that once you get to that point, it's a little bit cheaper and easier to pay for. So when you send out a loan, if you took on a massive loan in the future, obviously all this stuff is based upon loans, isn't it? So if you think of you've taken on a load of debt for the future, but you've got one way of actually lowering the price of that debt by just increasing the money supply, you're going to obviously increase the money supply, and that's what governments are inclined to do. When in the past you had gold-backed currencies and governments didn't have the power to manipulate currency markets or interest rates and things like that, well, let's say currencies for the meantime, then you had a certain path of sustainability. So yeah, we have this dynamic of currencies and interest rates which are occurring, and these obviously have an incredible impact on. So for currencies, you would obviously see that there's international investors which increase and decrease, and for interest rates, obviously that has a direct impact. How the governments manipulate the interest rate will have a direct impact on people choosing to invest into property. So if you know that you have this incredibly low interest rate, which you can access, and the banks are more than willing to give you this debt because they really want this exponential rise in money expansion, and so does the government to a degree, then you're going to be allowed this credit, and it won't, even though you would see that the sum is ridiculously high. It's like you're taking a loan out for $1 million and you're thinking, however am I going to pay this off? You look at the interest payments and you think, well, the interest payments are fairly reasonable, so I might as well just get that. So obviously it's a fairly it's an idea of just it looks painless in the moment, but maybe in the future this asset could turn on you. So obviously a majority of people are wary of this, but a lot of people are not, and people who are like property investors think to themselves, okay, well, I'm just going to come along, I'm going to buy this property. I'm not really going to be paying it off. I'm just going to sustain it on this interest only payment. But somebody eventually in the future is going to pay for this in the future, and they're going to own the property. Now, that's that's another little important point, is where people say, right, well, some point in the future, somebody really is going to see value in this thing and is going to pay for it at the correct price. Now, the problem is that all these property investors that have been involved and purchased can't quite realize that the person in the future really needs to be the person who's going to use the property for the correct purpose, not going to be the property speculator. Because if we lived in a pure market of speculation and no usage, then we would have a number of vacant properties and no usage whatsoever. And obviously, I know property investors do need people. They use renters to stick into their property investments for a certain level of time. But if you think of how property investors, particularly over in Australia, they don't really make much money at all. In fact, the majority of them make a loss on renting out their property while paying off the interests to these big institutional banks. But they look to gain an incredible amount in capital gains when it comes to selling on to another speculator, or potentially a really unfortunate person who's just buying a house for his family and just thinks in psychological terms, my parents had a property and I really want a property as well for my family. I can't have kids and not have a back garden to play around with and things like that. So you have these interesting dynamics which are occurring there. So I've mentioned that about the interest and the currencies. So you can see that there's a lot of these interesting parts of the government which are occurring there. And you can see how big the government is when it comes to the property market. So as much as we could all try and predict the fluctuations and the cycles of property lending and everything else, I can't predict the moves of the government. Well, I guess I could. I guess the government will try its all to keep things sustainable until a point of which they go, we can't do this anymore. And I guess it might get to a point where they think, okay, well, we can't bail out these banks. Maybe the voters' revolt goes too far against them, so that they know that they're going to have too much of an issue against them. But maybe they try and keep the system going. But also, you've got to think about the politicians' dynamic. They're in power for 8 years, for example. Let's just say they do 2 terms of 4 years. They really just want to kick the can down the road. They don't want. Who wants to be in charge of a government when there's humongous amounts of rioting? All people's deposits have been confiscated or taken away, and there's riots on the streets, and people are hungry. This is not a definite or anything by any means, but who wants to be in charge when there is a ridiculous amount of civil unrest occurring on your watch? So you'd rather just pass the buck and give it to the next person who's going to take over from you, and keep the exponential rise and bubble going forevermore. So, interesting perspectives, and let's bring it back down to supply and demand. Now you can see this demand is an incredible story, and it does have a number of facets which curtail into what creates this demand. And whenever somebody comes to approach to you, it's a simple case of supply and demand, it really doesn't boil down to that, and it really gives a connection into the world of economics and governments and ideals of liberty, and how markets should be as free as possible to sustain themselves, and we should really try and avoid government manipulation, central banking, in terms of trying to create a sustainable model for us. So, there's just a little spiel about how the world in which we live in. So when it comes to you having that little conversation in the back garden, and somebody saying, "Oh, I've got a property and I'm going to get my next investment property," it's just an interesting perspective just to go over these points. I've done this before with people, and people usually, when I start going into one about all these little aspects, people are just they don't necessarily listen to any of the little pointers that I make, and then they just go back to the rebuttal of, in the past few years it's always stayed like that, so it's probably just going to continue the way it is. I will, obviously, if people are really struggling for arguments, I obviously will say, well, you've got one person that's on your side, and that's the government. The government's going to always be on your side in terms of sustaining the property market. And I guess you could say, okay, well, if you want to stick with the government and stick with the ideals and the way that the government is run, you could probably just invest in property and hope for the best. But usually, in terms of economic cycles, things that exponentially rise cannot be sustained forevermore, and there is a time in which people have to pay the correct price for things, and you have to attain the real value, and there is a point of price discovery. So we have a heavily speculated market, say like in tulip fever, where everybody is paying ridiculous amounts of money for these tulip bulbs. Eventually, people say, well, it really isn't quite like that. And then the creditors that are giving, they used to, there's this little receipt which was made in the days of tulip fever, where somebody literally was selling pretty much an entire farm and loads of goods just for one tulip bulb. It was astronomical. And that was just people literally selling all their possessions to just get involved into one speculative market. It's sort of going like that, but it's like a chronic state of society where everyone is just working to just like both mother and father is working. Everybody's just trying to keep do as much as they can just to keep that psychological belief of having that house with the white picket fence and living and sustaining the dreams that they just had. Not even going better than their parents, just having the same sustainable dream as what they had beforehand. But because of the market manipulations and everything else, it's a fairly different picture. I guess the normal nuclear family of the 1950s and 60s just had the father that went to work, and the job was fairly a job for life. Nowadays, no job is for life, and really, there's to have that fairly decent 3-bedroom house, both parents really need to work in some capacity. So that has changed the entire nature of society and how everything's been guided. And you just got to look in terms of the future, what is going to happen in terms of the future. I guess people don't really necessarily need to live in these massive 3-bedroom houses. There are a lot of people that are choosing not to have families. There's people that can. So obviously, this is another little factor of what people can do in certain circumstances. People, like say, if you're a single man, you can live in a little bedsit with loads of bunk beds with other people, and you can have a fairly low cost life. So people have means and ways of getting around systems just to have accommodation. It's a little bit more troubling when you have kids, and it's even more troubling if you're a single parent. That's why I would always recommend trying your best to resolve any issues with therapy between couples if you think that there are certain marriage disputes which are occurring, which could potentially lead to a divorce of the family. But yeah, all these interesting concepts are factors to play in. It's always usually that wealth and the richest people always there's like a dynamic of the most patient people are always awarded eventually, but it's a case of time. And if you are prudent with your money and frugal, and you do not go too lavish in the moment, and you try and save in terms of money, cash, when we're in a state of a depression. I didn't really go into these details too much, but in a state of depression, all assets prices invariably go down in value, but governments really require asset values to go up, or they can't sustain the loans of the future. So, but if you can be that prudent investor, you can invest and look into different markets, look at the potential recovery can be looked at the blockchain technology, where people do own their own possessions, not the banks and governments. That could be something to be looked into. There has always been in circumstances where governments have trashed their currencies and to fight certain deflations, then after a certain amount of time you do get inflation and then hyperinflation of asset prices. And the governments require precious metals to sell to increase the value of their currency to stop the rapid inflation. So precious metals potentially could be an idea as well. There is confiscation and things like that. So yeah, we'll look into those factors and yeah, that will be look into those factors, and that will give us an idea of what could play out in the future. So yeah, just to round everything off, hopefully I've given you a good few ideas of what is going on in the world, and I shall obviously continue this podcast. This one has got a ridiculous amount of legs, and this is the thing that got me going in the first place. Thank you very. Also, by the way, when I started to go down this this route, I did start to go into conspiracy theories and got a little bit taken away with the fairies as well. So just be a little bit cautious whenever you even listen to me and you listen to anything else when it comes to this economic disparity. There are there is a certain plague of your mind which can turn into ultimate despair. It is part of psychology, and obviously if you do that yourself, you could think of what the masses will do if the market starts to turn on them. So just be very wary of these factors. Anyway, if you have any other thoughts, any other ideas, or if you've got any counter arguments to any of the points that I have made, please send them through and we can definitely look into them and discuss them. I thank you very much for your time, and we shall continue this conversation.